So it's Saturday, and I'm sitting there and I'm going like, well, the market's closed for 2 whole days. What am I going to do? I need some action. Well, so here I am in Chiang Mai, Thailand, and I said to myself, let me go to the racetrack and bet on horses. So here I am at the Chiang Mai horse racing track, and you can see it's incredibly popular, huge crowd there. And you can see I've selected my horse and I've already put my bet down. And I decided to bet on the number 7 horse here. And I know I'm going to make a lot of money. In fact, I have visions of, well, I'll just start hanging out here in Chiang Mai and become a professional horse gambler. Well, here I am a few minutes later, and unfortunately, my horse came in dead last. So, well, there's good news and bad news. The good news is I still have to keep on doing Wall Street winners. I have to keep trading the markets where I make a lot of money. I can't retire and become a horse player in Chiang Mai. Hey everybody, Courtney Smith here. Happy New Year, January 6th. So excited. So this is going to be a great year. And this, of course, is fantastic as well. All right, let's get right into it. All right, just as we've been talking about, the S&P makes new all-time highs. Now notice we're getting a little bit of a double shuffle up there. We had the strike, the killing of the Iranian general. That caused the market to kind of double shuffle a little bit here. Also, notice this green line here. This is the RSI, and we went and made a new high. Market came down, RSI came down, market makes a new all-time high, but the RSI does not. This is daily momentum divergence, and it says that the market's going to be a little bit shaky this week, okay? We're not going to see the kind of explosion that we've had over the last month, all right? So look for a little bit of a weaker price action this week. All right, the Dow. We talked before about how there's good news and bad news on this chart. Notice we also have the RSI divergence here. And I talked about how the buying pressure was up near highs that are unsustainable. And I still want to point that out to you. Selling pressure did come into the market a little bit more, but we're going to continue to see this gap between buying and selling pressure. One bullish thing is the ADX remains in a bull market. That tells us that we're actually in a bull market. So, hey, belaboring the obvious. All right, NASDAQ also same situation. The purple predictor, which had been explosive over this period, is now, let's call it neutral. Seasonality, very bullish right now. It just looks fantastic. I'll show you the seasonality chart here in a second. So we did get a little bit of more weakness here. This is the Russell 2000. Now, the interesting thing is that the Russell 2000 usually outperforms the big indexes like the S&P, starting in late December going through January. Yet you can see right here it's a little bit weaker than the big indices, but look for this to turn around and start to outperform the big indices. Now, here we are here, and you can see that we've got several choices, but the one that we should be using is the green line. That's the sitting president running. We have to assume that nothing will happen to the health, or for whatever reason, Donald Trump decides not to run. So at this point, we have to assume that he's going to be running, and you can see we're in the midst of a nice bullish run into February. Now, you can see that the year has a very unusual seasonality. It's not the way it normally is. So we get the nice bull run here into February, and then we really go sideways all the way to June. Now, instead of having sell in May and go away, actually you'd almost want to buy in May, but really you want to buy in June because the rest of the year starts to go up. Well, why is that? Well, typically by this time, first of all, sitting presidents, if the economy is good, they nearly always get reelected. And right now the economy is good. If we get the recession that I'm looking for, that changes the picture. But as long as the economy stays good, you assume the sitting president will win. And it's right about here that people in June, that people say, you know what, this guy's going to win again. And the market likes certainty. Okay, it dislikes uncertainty. So a lot of times when it's an open field, like notice the red line here, it sells off going into the election because they go like, oh, who's going to be the president? Who's going to be the president? Who's going to be the president? But if it's a sitting president, it's usually known much earlier who's going to be elected the president, and it's usually the sitting president. Not always, of course, but usually, particularly if the economy is good. So really, a lot of what the presidential seasonality is all about is the economy. If the economy remains good, we would probably anticipate Donald Trump being elected. If the economy goes bad and we get the kind of recession that's possible, then there's a very good chance that people say, you know what, we don't want this guy anymore. Let's give somebody else a chance. So the economy, I think, is going to be the most important factor affecting the election. What I just said falls into the category of duh, because that's pretty much the case every election. Okay, yield curve pretty much steady this week. Volatility index, we're getting cheap again. And when we get down below 13 and particularly below 12, I want to buy the VIX. Asset allocation, it was good early in the week, and then we had this fall off late in the week where they, after the attack on Suleiman, the Iranian general, people just said we need safe havens. And so they got out of stocks and they got into bonds. Our stock market riskdicator, however, did not really show that. So they moved a little bit towards the safety of bonds, but they didn't move to safe stocks. They kept their risky stocks. So I found that interesting. All right, global shares, really actually a little bit stronger than the U.S., but I think they'll probably go back to being a little bit weaker. I think that the Iranian attack, in a way, hurts Europe more than it hurts the U.S. All right, bonds rallying sharply. Now, what does that mean? That means lower interest rates. When bonds rally, that means lower interest rates. But let's take a look over here. Wow, very interesting. A big, big divergence. So the green line is Treasury yields. And you can see that they had been going up, which means that prices have been going down. But then in the last week, they came down on this allocation towards safe haven. But look at the indicators. The top one is the gold line. That's the price of gold, clearly calling for higher interest rates. Then you have the chart itself, the black and red lines. That's calling for higher interest rates. Then you have the blue line. It's kind of calling for higher interest rates as well. And yet, interest rates went down on the flight to quality. Now, this is very interesting because this may be setting up a big sell. Remember, when you sell bonds, you're looking for higher interest rates. We're looking for higher interest rates now. All right, the dollar was got smacked early in the week, late last week, rallied a little bit this week. Gold, oh my God, please! I've been calling for this. I called it beautifully. I don't really have a position in gold. I want to kick myself. Okay, our gold indicators, all of them bullish, particularly the green line down at the bottom. Got to get long gold. Now, West Texas Intermediate. So obviously, with the killing of General Suleiman, we saw the price of oil spike on Friday above what my target was. And I felt that our target was, 60, 62, 61. And then the Americans would turn on the spigots. But then on Friday, we had the attack on Suleiman, the killing of Suleiman, and that just threw everything out the window. That caused a sharp spike in oil. But let me point out that we did not close on the highs. I'm going to stop for a minute here. I'm going to spend a little bit longer than I usually do on crude oil. The killing of Suleiman will lead to retaliation by the Iranians. We saw how easily the Iranians were able to attack the oil fields in Saudi Arabia. It was nothing. It was very easy for them to attack them and put huge oil fields out of commission very quickly. Look for them to do that again. We saw them try to plant mines on ships. Look for them to do that as well. Now, the way these things usually work, and I don't know who is number 2 behind Suleiman, so what I'm about to say is conjecture only. Oftentimes, when you kill a guy like Suleiman, there's Suleiman 2 right next to him, and he steps in and nobody notices any change at all. Apparently, he was a very charismatic man, so you would expect that his number 2 guy is not going to be quite as charismatic. So sometimes when you kill the head of the snake, when you cut off the head of the snake, then the snake dies. And that's the theory of killing a general like this. Sometimes the snake apparently has 2 heads and it just keeps growing on new heads. So what we need to do is we need to wait and see. I'm doing research to try to figure out what the effect will be on the internal organization of the Revolutionary Guard in Iran. But that's the real question is this, do they just skip a heartbeat and they got a new guy? Or does this really cause a lot of confusion? And this guy is so charismatic that cutting off the head of this snake kills the snake. So we need to see. Right now, we have to be more bullish on oil than I have been in the past because I do anticipate some type of retaliatory measures, particularly aimed at the Saudi oil fields and some attacks on shipping. Not as much because that's not as powerful and it is a little bit easier to be stopped. All right, Bitcoin. I'm also, as you know, I've been short now for some time. I'm getting bored being short. We are breaking to new lows more than we're breaking to new highs. But the purple predictor is starting to perk up a little bit here. So I'll stay short one more week. But my feeling is that we need to really lower the stop down to about 7,500, something like that. All right, so we got short about 9,000. That would give us a $1,500 winner. All right, thanks, freebies. Love having you here. Fully paid up members. Just hang on one second.